Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look in gold market. So here we do not have so strong action as on the euro currency. It seems that some maybe geopolitical tensions, some other reasons, but provide support to the gold market. But at the same time it is moving lower, and actually if we'll take a look at other markets on a 10-year yield, this is dollar index, you can see it's also rising, and on the 10-year yields also are rising. So it seems that, as I explained today in the euro currency video, I haven't found any big reasons for this performance, especially on the euro. On the gold, it might be just treated as a normal pullback retracement in respect to the 2078 resistance. But on the euro currency, it is too strong action. And I suspect that it might be either due to the rebalancing of the portfolios as new financial year started, and investors probably changing their exposure to different currencies. So drop on the euro, it means that probably investors suggest more exposure in United States dollar assets, buying dollars and investing in the or plan to invest in United States. So either some changing of the consensus concerning of central bank policy. So it might be the change either in a view on the European Central Bank that probably will not able to hold higher rate for too long, or maybe a reassessment of the initially suggestion of the fast rate cut from the Fed. And so maybe it will happen a bit later than market initially suggested. So because in the news stream you do not see something really important that could trigger this kind of direction. So whatever it is, based on the gold market, everything for now goes with the plan. So yesterday we haven't got our hand shoulders pattern as we suggested, so market was not able to reverse the first support area. It means that we're just going to the second. On the daily chart, market start flirting with the MACD. I think that hardly we will get the grabber today, but let's see what will happen. It's more probable that market probably will keep going lower. We will see, because on the 4 time frame chart, take a look. After initial reversal performance here, the market has formed the bearish grabber. That's the first pattern that we have discussed yesterday. And we said that if you will see the grabber, it will be bad sign for possible performance, and it means that probably market will keep going lower. Although initially, as you can see, it has tested 2060 and started upward action, and we thought that, well, at least some chances exist that it may be starting upward action right from here. But just immediately after we have completed the report, market has formed the bearish grabber, which is actually now completed. So market dropped below the lows. But at the same time, it stands below this area on the background of rising interest yields in the United States and rising of the United States dollar. So it means that potentially we could get deeper downside performance. Besides, you can see that the hand shoulders that we initially were considering has failed. Market dropped below the head. So currently it's coming to the first support 2052, which is the XOP of our initial ABCD pattern. But in the new circumstances, I would also consider this major and larger AB equals CD pattern, mostly because its target stands around 2047 and it's very close to the confluence area of 2043, 2044. Actually, it creates an agreement with the confluence support, and it will be just safer if even overall tendency is breaking into the bearish. And if you still would like to consider taking long position, taking the position here, attempt to take the long position will be much safer, because if even we will be wrong, as usually I explain, the technical response, some of thematical reaction on the strong support area significantly reduced the risk of getting the loss here and increased chances for the break-even trade, if even we are wrong on the changing of the direction. So but first touch, just because a lot of orders are placing by the different traders around it, once they are triggered, market shows to bounce. Some traders are closing the positions, scalp traders, and see the strong level and start buying, closing the shorts. All this stuff is triggering some technical reaction. It doesn't relate to the direction, but it's just some technical response on the strength of the level, and that provides additional advantage and made the overall trade safer in this area. So that's why I think that it would be better to not consider any longs until market will reach the 2045. There we will see what will happen and make the decision. But potentially, as we said on euro currency, if this tendency will continue and we will get bearish trend turning on the daily chart, theoretically market could start deep retracement. And that's why I talked previously about this A, B, C, top, D potential retracement. So not just occasionally, we said we need to see what will happen around this area, and then we will make the decision whether the market will be able to keep the bullish conditions, keep the bullish tendency, or it really might be the deep retracement. So now we're particularly dealing with this question, and let's see what will happen.